Hey guys, it's Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that helped me build up a sizable rental portfolio in about 2 years and now manage that portfolio. Today, guys, I'm taking a question from a good friend of mine from actually high school, and we had a call for about 15, 20 minutes and asked some fantastic questions. So I wanted to just create a video. We'll see how long this goes. We might have to break this up into multiple parts. But he had four really good questions. So Nick, I appreciate having the call. You booking a time on my calendar and asking some really good questions. Nick just bought his first rental property back in Ohio, and had some questions about getting started, the do's and don'ts, and I'm just going to walk through these. So the first one's related to tax write-offs. The second question is related to rental agreements. The third question is related to property management. And then the fourth question is related to expanding your portfolio. So like I said, we might have to break this up into multiple parts, but we'll just get going here and see how the time takes us. So first question about write-offs. First of all, if you don't know what a write-off is, it just means it's tax deductible. If you make $100,000 a year and you have $50,000 in write-offs, your taxable income is $50,000. So that's what a write-off is. If it's not tax deductible or a tax write-off, then you spend $50,000 and you still pay taxes on the $100,000. So, can I deduct expenses for home repairs? How can I make the most of tax advantages? Should I make an LLC, company credit card, ? That's all related to this one question. So there's a lot of bits behind this. So first of all, can I deduct expenses for home repairs? Yes. I got another video you'll find up here and here about how I paid, I don't know, it was just a few $100s in taxes or no taxes one year. And I go through the list of itemizations. I think it's your Schedule E, if I'm not mistaken, from the IRS. And it actually has a line by line on what you're allowed to deduct. So that video will go through that whole piece there and save you a lot of time from me just reading through them. But that, in short, yes, you can deduct home repairs. Improvements, the big thing you have to know about improvements. So if you have to fix a broken window, that's a repair. If you have to install new windows in the house, which might be $5,000 or $10,000, that's an improvement. Okay? So repair gets it back to functioning condition. There might be some other verbiage around that, but again, if you check out the IRS website and type some of that in, it'll explain that for you. But an improvement elevates the property, right? You're improving the property. It's not a necessary expense to keep the property functioning, whether that's from a safety or health perspective. So an improvement has to be depreciated over the useful life, 5, 10, 15, 20 years. Whereas a repair, the 100% of that cost can be deducted year one. I have been advised, don't take my word on this 100% because this is just what I do with my accountant. The expenses that are about $2,500 and above, those are usually improvements. Expenses $2,500-ish and below are usually improvements. So that's the rough rules that we use. How can I make the most of tax advantages? Again, I would go back to that video and check out the IRS website and see what your Schedule E says and all those itemizations. But really, to make the most of it, you have to think strategically. If you're going to go out to lunch with somebody, make sure that you are meeting for business purposes. Talk about real estate. Talk about buying a house or what that person's doing in real estate or in your rental properties or whatever it is. If you talk about business, it's a business expense. Business expenses are tax deductible. Regular expenses are not tax deductible or not expenses not related to your business. So you want to make as many things as you possibly can ethically business expenses. If you're going on a trip, say you're going down to Florida, well, instead of just going down to Florida to vacation, why don't you stack checking out some Airbnbs on there? That would be a business expense then. The flight down. Now there's rules behind how long you have to spend there and blah, blah, blah. But by and large, what I'm saying is if you think strategically about this on how to make these expenses business expenses, you can ethically and legally have more deductions. So that's how you take most advantage of the repairs, is you start thinking strategically about How do I turn this into a business expense? From there, sorry, I got a text. From there, you will you'll be able to cut down a lot of your taxable income. Should I make an LLC? I don't know if I have a video. If I do, it'll be up here. But I know I've talked about this at length on Bigger Pockets. Guys, I think it is very much over dramatized by attorneys. I'm not an attorney, right? Don't play one on the internet, doctor, or anything else, or CPA for that matter. But I know that attorneys try to scare you in the worst case scenario, worst thing that could possibly happen. I know, like, I can count on one hand how many people I know that have been sued over their whole investing career, and it's not that many. And then you've got to say, okay, well, they've been sued, and does that person win the judgment? You know, I can sue whoever for whatever, you know, but are they going to win the judgment? You know, and actually, now it could get expensive for you and be kind of a pain in the ass. But you know, a lot of people, oh, if you don't get an LLC, you're you know, you could be in big trouble if you get sued. Well, first of all, if you're like me, when I started out, I didn't have shit. I didn't have a $300,000 in equity in a home. I didn't have a bunch of sports cars and boats and ATVs and stuff like that. I had a bunch of student debt, and I rented, and I had a little bit of money that I put into in a retirement account, and some money that I put into some rental properties. So, you know, you don't really have much to take, which is why I always say, why shit with worrying about spending $4,000, $5,000, $6,000, $7,000 on. Sometimes my structure that I set up was almost $15,000 to set up. Now, that was a couple dozen properties that took, you know, a complex structure, but I didn't really start doing anything with it until I had almost 15 to 20 properties. So why would you spend $5,000 to $10,000 up front to mess with stuff that gets really convoluted? You know, lending is a bitch. You know, that's one thing too. You want to get a loan, which is so cheaper in your personal name, but you want to put the property into an LLC and then try to get LLC financing, business financing. It's a lot more expensive. It can be very cumbersome. Whereas you just buy the property in your personal name and the financing's 30-year fixed, very cheap. So there's things to think about. Me personally, I don't know your situation. General blanket recommendation without knowing your personal situation would be, don't mess with an LLC. You don't need, and this is something that a lot of people don't know. You do not need an LLC to make tax deductions. You don't. A lot of people think that, oh, well, I've got to set up my LLC so I can deduct stuff. Doesn't matter. Makes absolutely no difference. If you have a rental property and you have expenses related to running that rental property, it is tax deductible. Whether you have an LLC, a C Corp, an S Corp, whatever, it is tax deductible. Long-winded way answer there. I hope you guys got the gist of that. The last piece about tax write-offs and stuff is a company credit card. Now, I think this is a very good question, and what I always advise folks to do is it doesn't even have to be, when I say this, people immediately think a business account. I don't care what kind of account this is, but go out and set up, whether you bank with Chase, Wells Fargo, a local credit union, whoever, go set up a separate account. Just go open it for $25, $50, whatever the minimum is, and label it as 123 Main Street, or whatever the property address is. Sorry, guys, I ate some almonds. And you know when you get those almond flakes in your teeth? Golly, they're all over the place. Set this account up and run all the business expenses through that. And I say business expenses as rental property expenses through it. Have your tenants send all the checks there. Cut all the checks for your vendors and stuff out of that same account. If you do it with Chase, you can Zelle. It doesn't matter. You can set up Venmo through that account, whatever you want to do. But if you do that, and then you can get a credit card, and like I said, this account can be a personal account, and you can get a credit card for that specific account and run all the expenses through that. Now, I don't really care how you do it, but even if you just get an extra personal credit card, just make sure one of the credit cards is only used for business expenses. And it will be so much easier, separate account, with a credit card tied to it, and all that is used for business expenses, it'll make your life so much easier come tax time, and your accountants, because or whoever's going to file your taxes. If they have to start digging and doing a bunch of stuff, it's going to get more and more expensive, and it makes it so much easier for you to watch your cash flow to see if this property is actually making any money, and for you to have write-offs for your deductions. So spoiler alert, your first rental property is probably not going to make money. If it does, it'll make very marginal money. So be ready to fund that, and that'll be a good way also of keeping track of how much money you've been putting into these properties. So I know we haven't got to the second. I mean, we answered multiple questions in that one tax question, but we haven't really got to the second question. So I'm going to make that a part 2. We might have to do 2, 3, 4. I don't know how many parts, but that'll be part 2. So I appreciate you guys tuning in for this. Let me know if you have any questions, comments, concerns about this segment, and we'll pick up again next week. Thanks.